Joining us on set here, our own Seema Modi and the Expedia CEO. Seema, take it away.
Sarah, thank you. Ariane, welcome to CNBC, your first quarter as CEO of Expedia.
Thank you for having me, Seema.
You did acknowledge in this earnings report the softness that you are seeing in the month of July. And I think the market is trying to understand whether this is temporary, whether it expands into 2025, because it does certainly come after significant number of quarters of resiliency that we've seen in the travel industry. So what are you seeing?
So I would start by saying we had a strong second quarter. We came in slightly ahead of our expectations with acceleration in our consumer business and also continued strength in our B2B segment and in advertising. The last few quarters, we have seen some softness in air ticket prices and in the price of car rental days. And as we've headed into the third quarter, we started to see a bit of softness on hotel average daily rates. So seeing consumers trading down a bit in the hotels. But look, we know people will want to spend on travel, so we're keeping a close eye on, is this sort of temporary, what's happening? But we obviously remain optimistic in the long term.
On those trade downs, how exactly is that playing out? You talked about how consumers are opting for cheaper hotels. So instead of the 4 to 5 hotels that have been so popular for 2 years now, they're trading down to 3 to 4?
Well, we're just starting to see a little bit of that in the trends. And if you sort of step back from a macro level, internationally, where there had been some countries that had been seeing post-COVID rebounds, that slowed a bit, and it's really in the U.S. where we're seeing that slight trade down on hotels. But, you know, occupancy is still good. People are still absolutely traveling.
And your room night growth of 10%, that was much higher than your direct competitors, Airbnb and Booking Holdings, in this latest quarter. But what would you attribute the weakness to that you saw in July? Is it consumers saying they just don't have enough money? Is it the borrowing rate or the jobs market that is cooling?
You know, I would say first, our second quarter, as you said, room night growth was really fantastic. It was at 10%. Brand Expedia, which is our biggest consumer brand, grew its room nights by 20%, which was really excellent. And again, in the first, sort of in the beginning of the third quarter, we've seen some softening, but still a nice, healthy growth.
There have been 2 state legislations that investors in the travel world have been watching. California, which now is disclosing the fees that customers now have to add on to their bookings. In New York, there's a potential bill that will pass that experts say would dramatically increase the prices of hotel average daily rates. Are these 2 risks for the industry?
You know, on California, it's not about increasing rates at all. It's just about the way that the rates are displayed so that the consumer understands up front what the all-in price is. And so for us, it's a matter of, you have to shift your display and make sure that customers are understanding that. And I would just say, regardless of what regulations are across the board, obviously we'll always be complying with them, and we want to make sure that travelers understand what they're getting. And then, you know, the market adapts.
I have a question on marketing, because you mentioned it as well on the call in terms of interrogating your costs, I think was the words that you used. And I'm curious as to where you are, if at this point, seeing the best return in terms of your marketing spend, and perhaps where you aren't.
You know, so we do spend a lot of money in marketing, and obviously it's not surprising for me stepping into the CEO role that that's an area that I'm going to be focused on. We've looked at both our working spend and our non-working spend, making sure that every dollar that we're using drives the most growth. And then with where we're spending, you know, we look by channel. We spend in performance channels, we spend in social, we spend in out-of-home. And wherever we're seeing the best returns is where we're going to lean into.
Anywhere you want to share with us where you are seeing the best returns?
Look, I think we're excited about social. There's some really interesting opportunities there, not only in where we're spending, but how we're spending. We're seeing some green shoots with actually using creator-led content versus the content that we're creating ourselves. We're seeing some nice results on that. And so we're early days in testing that, but we're optimistic.